Good morning, everyone. Elaine and Kylie here. We are so thankful that you've joined us this morning to participate in the Collateral Reporting and Lending Value webinar. We're very excited to share with you this week all about collateral.
Yes.
So thank you so much for joining us today. We will be recording this session. We also have you on mute, so just a couple of housekeeping items. We have you on mute to just have a better experience for everyone. And so if you would like to communicate with us, if you'd like to ask any questions or if we can clarify anything, please use the chat and Q&A session or section. You just use that by hovering over the top, and then there's a drop down, and you'll be able to find those there. With that being said, I think we're going to go ahead and get started because we have a lot of material to cover, and we want to make sure that we get through it and remain mindful of the time that you guys
get everybody's questions answered in a timely manner.
Absolutely. So let's go ahead and get started.
We're going to try. There we go. Good morning. I'm Elaine Shoemaker. I have been with the bank forever. I started when I was in kindergarten, and I have been in the financial services area for most of my career. Took over as the manager of the department in 1999, and that was just safekeeping. And then, 2008, we combined safekeeping and collateral, and I managed that function. That combination works really well.
And I'm Kylie Mergen. I joined the bank in 2007. I was actually a collateral review analyst. We call them collateral review officers now. And so I did a little bit of traveling around to perform collateral verifications. And then I managed that department for quite a while. And then in January of 2017, I was promoted to Director of Financial Services. And so I have both Elaine's group for the safekeeping and collateral operations, as well as the collateral review team.
So our goals for today, we want to discuss the recent changes to our member products and policy and the timing of those changes. We want you to have a better understanding of our lending value process and why we do it. We're going to demonstrate to you how to report collateral to the Federal Home Loan Bank. We're going to discuss delivered collateral as it's released back to your institution, how that happens and the process we go through, and then review the collateral reports that are available to you, our members.
So we're going to start with our lending value process, talk about the new effective dates for the lending values. We're going to go over any member product policy changes that were recently adopted that would impact your collateral. And then Elaine's going to do a very great presentation about walking you through how to submit the QCD form, the Qualifying Collateral Determination form. We're going to talk briefly about delivered assets, so pledging and releasing, and then we'll wrap up with collateral reports and a Q&A session. I do want to say before we get started that we will be covering the majority of the time the QCD form, and that's because the majority of our members use that to pledge collateral to us. We will touch on delivery for our specific pledge members or our members who are on delivery. We will talk about that, but it will be a much more brief part of our presentation. Of course, if you have any direct questions for us or anything about the delivery process, we are happy to go over that, but the bulk of today's presentation will be about reporting on the QCD form.
That and the security, how to pledge and the security.
Yeah.
All right. So our lending value process, how do we come up with those lending values we assign to each of the asset categories? We go through a very extensive research process. We do it at least every year. And depending on the market conditions, gosh, for those that have been around 2008, 2009, the markets declined so quickly. We were going through our process, I think, quarterly, just trying to keep up with the decline in the market. Thank goodness we've not ever had to do that since then, so we're back to an annual process. It happens, we start our process in the fall, midsummer to the fall, and it goes to the board. in October. These were just approved October 30th. We just had our board meeting last week. So when we're going through our lending value process, we really look at 3 different components to each of the asset categories that we have. They are the credit factor. So on a credit factor, that really, when we talk about that, it's just the asset quality over a 9-year look back. We're looking at the historical performance, as well as looking forward then at the delinquency trends in our 4-state area, which affects all of our member base. We look at a volatility factor. So this is really a 12-month look back in just the volatility in the market value pricing of that particular asset group. Then we look at a liquidation factor. So how easy is it to liquidate that collateral in the event that we have to take possession of it? We've never ever had to do that, but we have to be able to prove to our examiners, the FHFA, that we have the ability and can liquidate that collateral if ever needed. So really, we start like 100%, and then we deduct from 100% the credit factor, whatever that comes back down to. Then we minus the volatility factor, minus the liquidation factor. That's how we establish that lending value percent that you see in our member products and services guide. Like I said, it has to be approved by our board of directors. That was done last week. The timing of these are different this year, so please look very carefully. The securities and delivered loans do not go into effect until January 4th of 2021. We had a couple of significant changes that we wanted to allow our members ample time to replace the collateral that is going to not have any lending value, adjust as needed. So then the loan collateral, that for those of you who report on the QCD form, that they won't be effective until you file your March 31 QCD form.
Right. And that is very different, and it's different than anything else that we've done previously. Yes. So normally we would make those effective like in November or December, so it would be effective on that December 31 QCD form.
Correct. So we have another quarter.
Right. Making them effective on January 4th then allows you that full first quarter to figure out what to do.
Yes.
So just walking through the underwriting requirement updates and a couple of lending value updates. We did publish those yesterday. So they did come out, and with the news announcement yesterday, we are and have included the acceptance of e-notes. And we'll talk a little bit we're going to talk a lot about e-notes during the eligibility and collateral verification webinar. So if you're not signed up for those, certainly we would encourage you to do so. But we did include in our member products policy for approval this time that we will accept e-notes for conventional mortgages, 1 to 4 family, for FHA and VA loans, are held for sale single family loans, and also second mortgages on single family. Excuse me. Additionally, interest-only features were also added for multifamily and commercial real estate. Previously, for the last 10 years, I'd say, we did not have interest-only features for those asset categories, and we have added them. They can now be interest-only for up to 7 years. Okay, and then we did, as Elaine said, we did have a couple of categories that once we ran through that lending value process and that methodology that we have, the lending value was just not there. And so we are removing lending value for multifamily and commercial construction loans. I'm sure you can all appreciate that given the current climate, given the current environment that we live in, that unfortunately those assets aren't doing great. And so we are removing them. However, we feel like adding in that interest-only feature on the regular commercial real estate and multifamily real estate will hopefully in some ways kind of counteract each other.
We did have an interesting question yesterday come in that once the announcement went out, that these are still eligible asset categories at the moment. At this time, they're getting a zero lending value. The question was, can I still put them on the QCD form because it's kind of an automated process? Absolutely. But just know that today, they're not going to get any lending values. Mm-hmm. So they're still going to show up on your QCD form. They're still going to be there, but the lending value percent will be at 0.
Okay. From a security standpoint, there were no changes to the underwriting requirements, but there were several changes to lending values. Again, those were published yesterday with the news release, and there's just far too many to go over them, to be honest. So if you want to look at those and if you have any questions, reach out to Elaine or I, and we can address them for you.
And for the loans, the only 2 changes were these commercial and multifamily construction to go to 0. So no other.
Everything else stayed the same. Yeah. Great. So we have, we just wanted to start with the different agreement types, which definitely lends and leads itself into how you report collateral to us. So we have essentially 2 different agreement types that our members sign up with us when they sign up with us. We have the blanket pledge. That is a member who executes an advanced pledge and security agreement blanket pledge. Those are mostly our banks, thrifts, credit union members. They report loan collateral to us quarterly via the QCD form. Additionally, the lending value column is considered blanket. So if you look in the member products and services guide, there's sort of 3 columns there. Our blanket pledge members fall under that blanket column. And if delivery is required, those members utilize the collateral loan listing limited template. This represents 96% of our members. So again, this is why we're going to focus primarily on this process during today's webinar. But we don't want to leave out that we also have a specific pledge agreement. Hold on, we're trying to roll the technical. There it is, got it. So we also have a specific pledge agreement that the members under a specific pledge execute the advanced pledge and security agreement for specific pledge or housing associates. So these are more of our insurance company, CDFIs, non-depository CDFIs, and our housing associates that complete the specific pledge. In the member products and services guide, the lending value comes from the delivered or expanded section. We have Class A and Class B, so most of our insurance companies that are domiciled in a state that has exemptions for Federal Home Loan Bank, which includes our 4-state district, they fall under the Class A section, and our non-depository CDFIs, housing associates, or insurance companies that are outside of our 4-state area fall under the Class B. We do require delivery for both securities and loans for our specific pledge institutions. They do have to complete the collateral loan listing expanded template. This represents about 4% of our members. So again, we're not going to focus a lot on our specific pledge, but if you are on the call, you are obviously very important to us, and if we don't address any of the questions that you have, certainly reach out to Elaine and I.
Absolutely.
So we're going to start with just preparation for the QCD form. I always talk about how it's so important to prepare the data that you're going to put on the QCD form. It's not just going through the motions, which Elaine is going to walk us through, but it's not just about that. It's really taking into consideration all of the assets that you have and ensuring that when you're putting those assets on the QCD form that you've reviewed our collateral guidelines, you understand and have interpreted them appropriately, that you found and identified your critical reports in how you will put those assets or how you can identify the assets that you own to put on the QCD form. You want to make sure that you're removing ineligible loans. So again, after you've reviewed the scheduled eligible collateral, you might find that you have assets that don't meet our eligibility. You want to ensure that you're removing those from pledging. You want to keep your borrowing capacity in mind and any future borrowing needs. So you're not just trying to figure out what you need to pledge for today, but, you know, in a week from now, in a month from now, in 2 months from now, what are your needs going to be? We do have a requirement that you submit your QCD form within 45 days after quarter end.
And those are calendar days.
Yes.
Not business days.
Yes.
Calendar days. All right, so where do you find this form? Our new members only portal. You want to go to the Collateral tab up towards the top. Do the drop down, you want to go to the QCD forms. When you select that option, it takes you to this page. You want to go through, we're going to go through the online form today because 90% of our members submit their QCD form online versus the 10% who still like their paper copy for whatever reason, and that's fine. The option for the hard copy form is right below the QCD online form. There are instructions for both. The guidelines, the underwriting guidelines are not in these instructions, but those are all available in several different places along the way here. But today we're going to go through the online QCD online form. So we're going to select that button, which then will take us here. Brief page of instructions. What's going to happen? It also, so right in there that I have highlighted, that's where we're going to go to our form, but it also shows you the status of the form. So if you are the first time opening it up for this quarter, it's going to tell you, oh gosh, I don't remember what the status option is, but as this one you can see, it's already in progress. So we've already opened it for the first time. So once you select that link, it's going to take you to the very first tab of now 6 tabs. The first tab is the unrestricted collateral. We ask that you exhaust all of your unrestricted collateral first before pledging any of the restricted asset categories. So on this page, when you first open it up, the form will not be active until you select and enter your assets in that box up in your upper right-hand corner for the asset amount. As soon as you enter your assets, the form will open up and become active for you to do your data entry. So for each of the asset categories that you are going to pledge on your QCD form, you will want to enter the number of loans, the aggregate number of loans for that asset category, aggregate unpaid principal, or if it's the FHA or VA loans that are greater than 90 days, you'll enter the guaranteed portion as well as the UPB. Your lending value will be based upon the guaranteed portion, so that's critical. Once you enter the number of loans and the UPB, the lending value will calculate for you and show you on the far right-hand side. So the top section is for your the single-family FHA, VA, held for sale loans, and your then the multifamily are down below. But the held for sale, you can pledge on this QCD form if you're pledging less than 15% of your assets. Okay, and if you want to pledge more than 15% of your assets in this held for sale category, then the daily reporting requirement, and in order to do that, you'll just have to contact Kylie or myself, and we'll walk you through the process. And of course, there's a collateral loan listing. We have a report for everything. And then if you're doing that, the daily reporting, we will populate your QCD form with the lending values as of the close of business the day before. Okay. So then as you go down through the form of, right under the held for sale is our other category. So if you've been approved to pledge case-by-case collateral, like you have something that doesn't necessarily fit so nice and neatly in our box, you work with Kylie and Tom, get this case-by-case approval through, we're going to provide you the case-by-case number that you will need to populate here. We'll give you the collateral type code that you will need to enter. And again, then you do the number of loans and the UPB. A new category that we've added, so we're probably 3/4 of the way down the page, in the guaranteed portion, is our SBA PPP loans. Those were added back in May as an eligible asset category. There are conditions, though, around that, reporting requirements. You can pledge them, but you have to report a loan listing every week on Thursday before 9:30 in the morning. Those get emailed to the Financial Services Department. We update the collateral. We ask that you update your QCD form. The reason we have a weekly reporting requirement on this is because now that they're starting to be forgiven, those loan balances are dropping very quickly. So, and this is the only asset category that it does not have to be as of quarter end. You know, we've got, if you, for whatever reason, just put a loan on in August, well, it would be on your books as of September, sorry, so let's make that as of October 1st, 2nd, whatever. You can still put those on your QCD form. It just has to be included in that loan listing.
Right, for the PPP loans only.
For the PPP only.
Yes.
That is the only category.
Right. Everything else is as of that quarter-end snapshot.
Yes.
Yeah.
Absolutely. At the very bottom, the last is the unrestricted security. So if you have securities pledged to us, and right now everything is considered unrestricted in the security categories, this balance will be pre-populated for you. Again, close the business day prior, okay? In both this tab and the restricted asset tab, and throughout, if you'll go to the far right-hand side of the page, the little blue dot with a question mark in it. If you hover over that with your mouse, those are your underwriting guidelines for that particular asset category. So, you know, they're at your fingertips. You know, you don't have to go back out and look at the Member Products and Services Guide if you're, you know, have any questions. You can always hover over that help function, and it will give you all of those on screen. So we wanted to make them as available to you as possible, as conveniently as possible. All right, so we're going to go on to the second tab, the restricted asset collateral types. These are like we're going to talk about ag, commercial, construction, loans, seconds, and HELOCs in that upper section. You are limited to 25% of your assets in lending value on restricted asset categories. In total, your total amount of lending value or restricted assets cannot exceed 25% of your assets that you entered on the front page. The form will auto-adjust. If you're trying to pledge more, it will reduce the lending value for whatever asset category that you happen to go over on. So, and it will tell you, though, up at the top, in red, that it's been adjusted because of the asset category or the restricted asset limit. So again, for each of these asset categories, you want to enter the number of loans, the UPB, and it will calculate the lending value for you. Again, we have areas designated for other collateral for the case-by-case. Then in the bottom section is the other collateral. It sounds so daunting. But this is for our CFI institutions. And a CFI, if you don't know whether you're a CFI or not, the definition is an FDIC insured institution whose assets are less than $1,224 million over a 3-year average. So the past 3 years. We get an updated value every January. So
It keeps growing.
It keeps growing, it does. But unfortunately, that leaves out like our credit unions, or any of the insurance companies, any of that. So it's more geared towards our smaller community banks. Again, if at some point in time we ever then added securities, an asset category that we would consider as a restricted asset category, it would populate here for you at the very bottom of the page. And then it will total. You know, if you look at the bottom, it just tells you the total restricted collateral values. The third tab, is a new tab this quarter. We are collecting information on LIBOR-linked loans that mature after the year 2021. So we tried to give you a very good, robust paragraph about what we're looking for, but you are required to answer the question, yes or no. Do you have any loans pledged on the previous two tabs that are linked to the LIBOR rate that mature after 2021? If it's no, you're done. You're done with this page, you move forward. If it's yes, then as you see in the body, that it's going to populate all of the information that you entered on those two tabs. And what we're looking for in the number of loans and the UPB is just the amount, the number of loans and the amount that are tied to LIBOR. So it's going to be a subset of your values that you pledged on the first two tabs, more than likely. It will not exceed. It will not let you exceed.
Right.
But you cannot bypass this page. You won't be able to submit your form without answering the question.
Right. So if you answer no, you can move on.
Yes.
If you answer yes, you're going to have to populate something down below in whichever category where you have LIBOR. So if you accidentally hit yes and it's not letting you go, it's because you haven't put anything at the bottom. So you just need to go up and answer no, if it truly is no. But if you have answered yes, then you will have to submit something for the LIBOR-related collateral, LIBOR linked.
That's a little tip. If you entered yes and you entered loan data down below, and then you inadvertently hit no, it's going to clear out all that data you just entered.
So don't do that.
Yeah, just a little caution. You know, discovered that pretty quick.
Yeah.
And it's like, oh, dang. So that's our new tab. Once you've completed that, you go into the additional information tab number 4. We're asking the questions 1 and 4. We're asking questions about are any of the loans that you've pledged, are they wholly owned by an affiliate? Yes or no? If it's yes, then we want to know who, the name. We look to make sure that there's agreements on file because there's special stuff that has to happen with all of that. So we're making sure that we're all on the same page. We've got the appropriate agreements in place and what have you. Questions 2 and 3 about are any of the loans that you've entered, are they held at a different custodian or serviced by somebody else? If yes, we're going to pre-populate those boxes for you, and we want you to review those and answer, is this correct, yes or no? I mean, it's going to be a required response. Won't let you leave the page without it. So if we don't know of any services or custodians on file for you, the boxes will be empty. You, again, make sure that that's correct. Question number 5 is asking about any adverse material changes in the past 3 months, yes or no. If yes, put some information in the additional comments box, and we will follow up with you. A response to yes to any of those questions will cause your form to stop in our financial services queue for review. Okay? So we'll look at comments, we'll, follow up with you, make sure that we have the appropriate documentation in place, all of that good stuff. But all responses are required. You cannot submit your form. I don't even think you can leave this page without answering all the questions. So again, this is required. It will tell you at the very end. All right, so moving to that fourth tab, five, collateral summary. This is going to summarize everything that you've entered in the first two tabs, right? And it's going to give you the values as of today, and it will give you the values as of quarter end. So the quarter end is all the way to the far right, I believe. No, sorry.
No, it's opposite, yeah.
That's a current value, as of this quarter end. Really, that only comes into play if you're pledging securities or held for sale daily reporting. It's going to populate the values as of quarter end for those securities, and then it will populate as of today.
Mm-hmm.
You can't submit your form if today your collateral balance or your excess collateral balance is negative. That's a control feature. You have to cover your balances.
Right. As a collateral-based lender, we like you to have enough collateral. Right?
And that is something we monitor in our financial services area daily.
All the time.
Reports that pop up first thing in our report queue that say big red flashing neon signs that say these people need more collateral today. All right, so that really sums it up for that page. We're in the very last, the submissions page. Okay, it's going to ask you some questions. You're going to need to say, I agree, before that submit button becomes populated. Once you select I agree, you can hit submit. If there's any, before you hit submit, if there's anything that you want to share with your approver or with us, you use those additional comments boxes. But this particular page is directly geared towards the approver. Okay, so if I'm going to submit my form. I'm the data entry person. And Kylie is my approver. So I'm going to submit, but I'm going to put a special note down in the comments box for Kylie. I did this, blah, blah, blah. So then I'm going to agree, and I'm going to submit. It's going to send an email to everyone that has been designated as an approver. And maybe we should touch base on those roles, too. There's two roles in QCD. Mm-hmm. You're either a data entry submitter, or you're, or approved.
Right.
We set it up specifically this way because there's a lot of institutions who need that dual control. You can be the data entry person and the approver.
Right. You can be both.
You can be both. You can be only the data entry person. You can be only the approver. Mm-hmm. The approver, though, has to be listed as an authorized individual on our credit resolution or credit authorization that we have on file today. Those are the only people who can be an approver. So
anyone can be a submitter.
Anyone. There are no limitations. So anybody, it depends on how your internal members-only admin sets up those privilege levels. But the only person that can be assigned the approver is, and we go back and it's validated against the reports or the authorization forms we have on file. Mm-hmm. So those are the only people who can have the approver role.
Okay.
Okay? So once I hit submit, it's going to send an email to all of those that are listed as an approver that says, hey, your form's ready to approve. So then it's going to be always a two-step process. Even if I'm the same, I have both roles. I'm going to have to log out if I'm the submitter. I'm going to log out, wait for just a little bit, then I'm going to log back in as the approver and approve the form. Mm-hmm. Okay? Two-step process always. And it doesn't come through to us
until both have been done.
Mm-hmm. Okay? So what happens when you approve your form? Where does your form go? Typically, it's a straight-through process. So if you didn't put any comments, you don't have any case-by-case collateral, you're just pretty generic, then it's going to go through and update your borrowing capacity intraday. Okay, it goes through it connects to our collateral application, updates your collateral, updates our lending value or lending application, so you can come in and borrow within probably 20 to 30 minutes after you submit your form. It stops in our queues, like we had mentioned, when you answer yes to any of the either questions 1, 4, and 5. Or if for whatever reason you've been required to submit a loan listing, or if you're pledging something in those other fields, the case by case, we go back and check and make sure that you've got your case by case number and your collateral codes correctly and that you've been approved to do so. Or if you've put a note in the comments field, we know that it's meant for us, so we need to review it.
So the most common issues that we have, probably the calls we get the most when it's down to the wire and someone can't submit their QCD form, right? Usually they say, or we hear, my form is completely grayed out, I can't do anything. Did you put in the asset field first? Because that's sort of unlocking the form, right? So if you put in your asset field, it unlocks the form. So if you are experiencing some difficulties in entering in anything, check your assets form and see if you have submitted or input that field, and that will unlock the rest of the form. Other common issues that we see are that there is insufficient collateral pledged. Again, as a collateral-based lender, you always have to have enough collateral. So a form will not allow you to move forward if you do not have sufficient collateral to cover the outstanding obligations as of today, or the day that you're submitting it, right? And then, as we talked about extensively, it is a two-step process. Usually when we're getting down to the wire of QCD forms being ready or needing to be submitted on the deadline, we can see the sort of the process that they're in. We can see what stage they're in, and there are a lot sometimes that are out there as submitted, and just someone has not gone in and approved them yet. And so that's typically, those are generally the biggest issues that we see during the submission process.
All right. So I think that pretty much has covered the QCD form.
Absolutely.
The data entry. Securities. Securities is another asset category. We have multiple asset categories within this umbrella of securities. We're not going to go through much on the way of eligibility even tomorrow, just because that's a pretty extensive.
There's a lot.
There's a lot. So in order to pledge securities, we have a couple of options. This one is if you're safekeeping. We do act as a custodian for a number of our members. If you want to pledge securities that are held in safekeeping with us, hold it in safekeeping, you're going to fill out a collateral activity report. And that is found out on our members only collateral headings and under forms, okay? A collateral activity work card. You're going to submit that to us. We're going to go in, make sure it's eligible, what type of lending value is going to be assigned. We're going to restrict the movement of that security in our safekeeping application. So you can't move it until we release it. Once we do that and we update it in our collateral application, your borrowing capacity is updated so that you can come in and borrow on it that same day. We ask that all of these collateral activity reports and other pledge notifications be to us before 3 o'clock in the afternoon. We have to have time to be able to process it, because it does. It takes us a little bit of time to make sure that it's eligible, update the pricing, update the factors, make sure everything is current, and get that updated. It's in our application. A collateral activity report is even required to release. We'll use the same form for releasing. We'll take a look at the form in just a minute, but you're gonna highlight that it needs to be released. And as long as adequate collateral remains, we will remove that restriction on that QCIP, that position, and you're able to sell it. So a lot of times, they've sold the security. So they send in a collateral activity report, they want to sell it, and send us delivery instructions to deliver out either versus pay, or it's a movement of, no money involved. So, but even if a security pays off, or is called, matures, we still ask that you send in the collateral, just acknowledging the release of that collateral. Okay? Here's a peek at our collateral activity form. You're going to fill in the Coast ID, your name and address, city, state. You're going to put today's date. In the top securities activity section, in the drop down on the far left, you select pledge or release, whatever you're wanting to do. Put the QCIP and security information in those boxes. The purchase date. The purchase date really is for any private issue or commercial securities that you're, not necessarily commercial, but private issue stuff. Because if it matures or is issued or purchased after July 10th of 2007, it has to comply with our interagency guidance on non-traditional and the addendum, blah, 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 risk product. So that's a key date. So again, we have to, only for the private issue stuff, that the purchase date so be filled out. And the settlement date, if you're moving it into pledge, what day are you going to do that? Are you doing it today? Are you doing it tomorrow? We'll just ask for the date. So we do allow approved third-party custodians, which means that if you're safekeeping your securities at another custodian, you can request to pledge securities and leave your securities at that custodian. We go through an approval, we have a short form that we send to you to fill out, just to make sure that the institution will take that information and do some research, make sure that institution is still healthy and viable and it has some requirements. If they're approved, then we will send you the third-party agreement, custodian agreement, that has to be signed by that institution, your custodian, your institution, and then by us, before you can pledge security. So there's a lot of documentation that has to happen before you pledge. So you want to make sure you allow ample time to get that done if that's something new you want to start. We have a different form, of course, an Exhibit A to that third-party custodial agreement. It's an exhibit that's attached. That you will fill out, and you'll send to us and your custodian. Your custodian then will be required to send us a pledge receipt, acknowledging that they have restricted that security on our behalf. They will not be allowed to release that security without our written authorization. Okay? So, and part of the custodian's requirements, once they send that pledge receipt, they can't release it, they also have to provide us monthly statements, because we mirror that position on our collateral application and our safekeeping application and mark it as held elsewhere, because that's how we update our pricing. We do daily pricing, and we'll get into that in just a minute. But we mirror that, and that's where your lending value comes from. So we require the statements to make sure that we're always in sync with that, or better yet, that the custodian is always in sync with what we have on our books, because that's what's driving your lending value. Again, if you're wanting to release the security, it's still, we're using the Exhibit A, only marking it as released. You would send that to us. If you have adequate collateral after we would release that, we'll sign the release section at the bottom of that exhibit, and we will send it to your custodian telling them it's okay to release the restriction on that.
Right. So the main difference is it requires additional correspondence and coordination with another entity.
Correct.
To move that security.
So it's going to, just honest truth, it's going to take a little longer to get that done. By the time your custodian gets the information, pledges it, creates the receipt, emails it to us,
you do what you need to do.
We do what we do on our side.
Right.
So it's just a little
another layer. Yeah. So just safekeep with us, and it'll be fine.
Absolutely. If you're a specific pledge institution, the third-party custodian is not an option for you today.
Right.
We do require the specific pledge institutions because this is the only collateral that we have. Mm-hmm. We do not have a blanket agreement, mm-hmm. So we're reliant on only the collateral that is pledged to us. Mm-hmm. So it's a control thing. We like to have control of that. This is what the Exhibit A looks like. Again, you'll fill out the custodian name, your name, the date of that agreement that we have on file between that all of us have signed. You're going to, in the body of it, under the securities activity again, select the pledge or release, and then they put the QCD FORM and other security information. Mm-hmm. It has to be signed by an authorized individual. Again, that individual has to be on the credit resolution or the credit authorization that we have on file. And you're going to send for a pledge, again, you're going to send that to us and send it to the custodian. We will wait until we get the receipt from the custodian before we pledge it on our side. If it's a release, you can send it to us. As long as we are able to release it and you have ample collateral afterwards, we're going to sign that release and then send it over to the custodian, and they can release it at that point in time. Okay. Security maintenance. You know, we do a lot of maintenance on our securities. We do a daily reconciliation with our custodian if it's held in safekeeping. So we use Citibank. We do a daily par reconciliation with them, make sure that we're always in sync. We're loading prices from our third-party vendor that we've contracted with. We upload those every morning. We upload factors, so any of those mortgage-backed securities. You know, at this point in time of the month, the new factors are being published for the payments that are coming up this month. So we're going to load those factors every morning. Any private labeled securities, private issues that are rated by Moody's, Fitch, and S&P that are eligible, we update the ratings on those. We go out and pull those in and update the rating because we have a rating requirement. It has to be AA or better on any of those private issued or commercial backed. Again, we do the monthly reconciliation on that are held at a third-party custodian. We do allow pledging of cash. So you have an abundant amount of cash, and you're just short-term. You pledge you want to take out in advance. You can pledge that cash. Use that collateral activity report, whether it's, you know, whether you're a safekeeping member or not. If you're pledging overnight, or if you purchased a Federal Home Loan Bank CD, you can pledge that. You're going to use those in middle to lower sections, pledge or release, but we ask you enter the amounts that you want to pledge. But then, do we need to move it from your demand account to overnight if it's a pledge? You'll want to mark the appropriate box. Or if it's a release, do you want us to take it from your overnight account and move it to your demand account? Mm-hmm. Or if not, if you don't indicate, we're going to leave it in your overnight account.
Mm-hmm. And it has to be in overnights in order to be pledged, right?
Absolutely, yes.
Yeah. And in what increments?
$100,000 increments.
Okay.
So, again, it has to be signed or come from an authorized individual based on that credit resolution or credit authorization forms.
Excellent.
Right.
So we're going to give Elaine a little bit of a break because she's talked to you a lot about QCDs and securities. So I'm going to go over delivered loans. We talked a little bit about that briefly, but just to give you a few more details. To pledge a delivered loan, you would need to complete the appropriate collateral loan listing template. We talked about limited and expanded versus what your agreement type is, but either way, the collateral loan listing template will need to be completed. You would send that template via secured method to the Financial Services Department. In addition to sending us the data, you would need to send the appropriate loan documentation. That is the loan information, documentation, the original promissory note, mortgage, title, appraisal, all of the documentation. So what we do with that then is once we receive the collateral loan listing report, we reconcile that back to the documents that were provided. If you said on the collateral loan listing we were going to get 5 loans, we want to make sure that we actually receive those 5 loans. So we reconcile that back. Once we've reconciled, we do upload that data into our collateral system. And then we review it for eligibility. So we review each of those loans against our underwriting requirements to ensure that it's eligible. If it's eligible, the lending value is assigned and your borrowing capacity would be updated immediately. If it's ineligible, we would identify what the exception is, and the exception report is out on members only, so you can retrieve that daily. And it will detail the issues for you as far as what is preventing it or precluding it from being eligible. The restricted asset limitation, just one caveat to pledging delivered loans, restricted asset limitation is not applicable for delivered assets. We consider all delivered assets unrestricted, so no matter the category. For the collateral loan listing expanded template, again, that is required for all of our specific pledge members who are delivering a loan collateral. It is optional for our other members. The market value is determined by the lesser of the unpaid principal balance or the loan value as determined by a third-party pricing vendor. So we do send the assets on the expanded template to a third-party pricing vendor and every quarter. And so we would provide you with lending value off of the lesser of those two, the unpaid principal balance or the price. There is a quarterly pricing fee. All of the data points are required on the collateral loan listing expanded template. The template is out on forms, which we're going to go over in just a little bit on where to locate those. And updated loan information is required within 5 business days after each month end. So it is more frequent that we are receiving those updates from our expanded template members.
Correct.
On the limited template, those can be used by all members on delivery except for our specific pledge members, our non-depository CDFIs, and housing associates, again, those sort of specific pledge members. The market value is determined by the lesser of the unpaid principal balance or the present value calculation. We do an internal present value calculation on future cash flows that are discounted at the current market rate. If we were to obtain a third-party price for the limited loans, then we would also use that. So it would be the lesser of those 3. Today, we do not send out for a price to a third party on our limited assets, just on our expanded, but we do have the option of doing that if we felt that the assets were very volatile. The members are on the limited template are requested to complete as many data points as possible. So again, where our expanded members have to do it, it is required. For limited, we ask that you do as much as you can. Again, while we're reviewing those assets, we will fill any gaps that you may have in the data. The template is out on members only, and the updated loan information is required 30 days after quarter end, so a little less frequently for our blanket pledge members.
But before the QCD would have been.
Yes. So to release delivered loan collateral, again, we have a form for everything. So we do have a loan release request form. It is under forms on members only. You would want to note any change in address. If you want us to send it to a different branch than maybe your main location, you would need to provide us with the information of where you want us to send it. The request must be by an authorized individual, again, on the credit authorization or credit resolution. And you would just email or fax this completed form to the Financial Services Department. In lieu of this form, if we received a request to release that was in an email from an authorized individual, we would accept that. So you don't have to complete the form. We do accept email as an option. So if we have adequate collateral, we would release it, release the asset, and return it to you via FedEx. Is usually our preferred overnight carrier, just so we can track it and send it back to you.
And on occasion, we have had the member provide a courier. They came and picked up their loans.
Yes.
Actually, there's been a member who actually came to the bank and picked up their loans and took them back, or
Yes.
brought them in.
Yes.
So we do work with you.
Absolutely. So again, moving on to members only and where you would find collateral information. And you can see there in the graphic that along the top there's a collateral section. So that's kind of where we live, in the collateral and safekeeping section. As you drop down, there are forms. The forms that are available to you there's obviously quite a few of them. There's the collateral activity report for pledging and releasing securities, as Elaine said, the collateral loan listings. So for different types of activity with us, we have different types of loan listings. I should mention that we have added, and we didn't get it put in here, I just thought of it, we do have a PPP listing for that weekly PPP loans. And then we also have subsidiary certifications, the exception clearing report. So if you wanted to provide us with additional information as you clear your exceptions for delivered loans, you could provide us with that report. And then if you had non-lead lender assets that you wanted to pledge to us, that's that participation acknowledgement of custody and security agreement that are at the bottom. And then Elaine's going to go over the reports really quick.
Yes. So basically, it's members only under the collateral. We're going to go all the way down to the bottom and select that reports option. When you do that, if you look to the right, the collateral reports, those are your options. You can run it we have a 7-day history out there. That's for daily, or monthly, it goes back a year. So if you're looking at just month ends, or that's all you want to select that monthly radio button. Most of the reports are either available in PDF or Excel, except for the collateral loan listing for limited and expanded. That is way too much information to put on a PDF. So the only option is to download it into Excel. Here is just a quick list for your reference of all of the available reports and just a brief summary of what each one has. We want to spend a little time on, which is my favorite report, is the Member Collateral Summary Report. This report tells us, or has on it, everything that we know about you, our member. So it's really important that you take a look at that to make sure that we have the most accurate and current information on file. So first page is really just a summary of your collateral. Okay, it'll break it out by loans and securities, whether they're unrestricted, then restricted with a grand total. It tells you what the total collateral required is. So you have outstanding credit obligations plus maybe some prepayment fees included. There are certain institutions that are required to collateralize prepayment fees. So total collateral required, that's the amount that you have to collateralize at all times. We have to be 100% collateralized at all times. It gives you the number there. Excess collateral, so what's the difference? What's your borrowing capacity based on your collateral for the day and your collateral ratio? It will also tell you if you have, so you're on delivery and you're sending us loan collateral. Are any of them ineligible or in a pending status? Again, brief snapshot here. Page 2. Page 2 tells us all of the other regulatory information about you that we have on file, and kind of a brief summary of your breakdown in credit obligations as of prior day and then startup day. It will give you the capital stock that you're required to hold, or that you have, that you have purchased. Member Collateral Summary Report then goes into the more detailed asset categories. This would be for the securities piece. It will tell you how many securities that you have pledged in each of those asset categories, the unpaid principal balance, market value, and lending value. If it's ineligible, it will show up on the far right-hand side. The next page is for loans, basically the same thing. Tells you all of the loans that are in the unrestricted category, the number of loans unpaid, government guaranteed if there's such a thing, and market value and lending value. That's on the left. On the right is all of your restricted collateral. Breaks it down that way. Ineligible loan and securities assets.
If you had any.
If you had any, right. So, for instance, if you had a private issued security that is now single A rated, it dropped out of eligibility. So it's going to show up here on the ineligible. If you had loans, delivered loans that you've sent them in, and we have acknowledged that we've received them, but they're pending a review by a collateral review officer, they're going to show up here. So it kind of gives you an update of where we're at in our process.
Mm-hmm.
Last page is so what do all those collateral type codes mean? So there's our breakdown. It's a great, full, encompassing report.
Elaine loves this report.
I do. We spent a lot of time on this report. I think we finally made it through to our Q&A section. We are right at 11 o'clock, so we tried to cram it all in.
Yes, we did.
We love questions. We did have a few questions that were submitted at registration.
Okay. We'll go over those now, yeah.
Okay. When will LIBOR-linked loans no longer be eligible for pledging?
So today we don't have a great answer on that. My gut is telling me that probably 2021, unless, yeah. So post-2021, if you have not moved to an alternative index, then most likely they would not be eligible. So you want to make sure that you're incorporating fallback language to another index or writing to a different one as you're rewriting those assets. So be very mindful of that in 2021.
And that's why we're trying to collect the LIBOR data now, just to try to get a handle on
how much
is out there today.
Absolutely.
You know, our expectation would be as it gets closer that number will continue to diminish. Okay. What revisions will be made to the member guide for loan accommodations? For example, exceptions have been made to allow banks to alter debt notes without it being troubled or restructured due to COVID.
So we have temporary COVID guidelines, underwriting guidelines. So I would encourage you to review those and see if that helps answer the question that was submitted. So those are published in our Member Products and Services Guide. We came up with those in May. They were approved by the board during a special board approval. So review those, see if it answers your question and it provides you with the resources that you need. If not, feel free to reach out.
Absolutely. And then we have, what is the best method for communicating to a collateral review officer about individual exception items? Yeah,
so we have a collateral review group email, which I think was on our contact page at the end. That's usually the best way to communicate with us from a collateral review perspective. There's a collateral review group email.
Very good. I think we addressed that. Are you accepting e-notes at this time? And then the treatment of real estate with marijuana-related tenants.
So we do not accept currently any marijuana-related business. We can't because it's not federally allowed. We understand in states it is, but until it's federally accepted, we are not allowed to accept it.
How about the minimum DSC or debt ratio documentation required for real estate loans?
So we will go over that quite a bit during eligibility and collateral verifications, but we do require for you to have a debt service coverage ratio documented in some way, but we don't really have standards in that you have to prove to us that you did it a certain way, right? Like you have to document it. Usually that's in some sort of credit review document or something like that. And those were the questions that we had. We had one question that came in about e-notes. As far as with the acceptance of e-notes, if we have a modification on an existing loan that is pledged, can that agreement be signed electronically? The short answer is no. e-notes, and we're going to go into this in a lot of detail, and then we're even going to have an e-note webinar after the first of the year when we get to that space. But e-notes, e-notes and e-signatures are very different. So not all e-signatures make an e-note. All e-notes have an e-signature, but the two are not equal. And so we'll go over that quite a bit in the eligibility and collateral verification webinars. So I appreciate your question. Thank you so much.
And that is tomorrow.
It is tomorrow at 10 o'clock.
Do we have any other questions?
Nope, that was it. Oh, hold on, one came up. Just kidding. When do the new interest-only guidelines go into place for the multifamily and commercial real estate? Those are effective for on January 4th, which means they go into a place on the 331 QCD form. So you can begin pledging them on 331. Unless
you're actually delivering loans to the Federal Home Loan Bank, physical documents, those go into effect January 4th.
Yes. Is the collateral summary report updated daily?
Yes, it is.
Yes. Very good. Thank you, guys.
It's intraday. It's as of close of business the night before.
Right. Right. So after all that daily processing, every day it's republished, right? Yeah. Okay. So we have some additional educational opportunities that you can see up there. There is a regional meeting with Esther George next week. Is that next Friday the 13th, isn't it? Yeah. But I think that sounds really interesting. And so I might even try to sign into that. We also have some webinar series that are coming up about, enhancing your current position here at the bank. So analyzing your liquidity and improving that, identifying any hidden collateral. We also have something in December to talk about, are you maximizing your collateral that you currently are pledging? I know it's a little too early to talk about it maybe for 2021, but we are so excited.
We're so hopeful.
So we're very hopeful that we will be able to have an in-person annual management conference in April of next year. And then we are also hopeful that regional meetings next year can also be in person, and those dates are up there on your screen. And then as always, we have and offer collateral review one-on-one guidance should you need it. So if you have a particular loan or a particular asset category that you're really struggling with, all of our collateral review team can answer any questions that you may have related to eligibility. And there we are.
There we are. One more time. We are here for you. We want you to be successful. Please call us, contact us if you have any questions. We have very, very helpful staff that if we're not available, they can certainly answer most of those questions that come in.
Yes.
So feel free to contact us.
Absolutely. And thank you so much for joining us today. We know that you have a very busy schedule. It's election day, go vote. But we are so thankful for our members who take the time out of their day to spend a little bit of it with us, learning about collateral. So thank you for joining us. We will record this. We did record this, and we will post it out on our website probably in the next couple of weeks. So you can certainly revisit if there was a portion that you'd like to listen to again.
And our goal is to record all of our collateral webinars this week and post them at the same time. So if
Absolutely.
you need tomorrow for the collateral verification,
yep,
they're there.
Okay, great.
Well, thank you all so much for joining us today.
Thank you.
Have a good rest of your day.
Take care. Bye-bye.